Namaste and welcome to VD Decode YouTube channel.
Navigating the stock market without a plan looks like watching a flock of birds scatter in all directions. You spend your energy reacting to unpredictable headlines and chasing trends, hoping you don't get left behind. Following generic advice or mimicking a friend's portfolio often leads to poor returns. It also leaves you awake at night, wondering if your specific financial needs are actually being met. This comparison shows the difference. On the left, generic investing is chaotic and reactive. On the right, goal-based investing assigns every dollar to a specific job, like buying a home or funding a graduation, rather than an arbitrary market index. Over the next 5 minutes, we'll walk through a framework to map your life milestones, match them to specific funds, and automate the entire process. Investing without a personal stake is essentially gambling. Wealth creation starts the moment your capital is assigned a specific objective. Let's begin. Take a blank piece of paper and write down 3 specific, tangible life milestones you are currently saving for. Next, assign a rigid time horizon to each one. You need to know exactly how many years you have before you need that money to ensure your resources are allocated efficiently. We sort these into 3 blocks. Short-term goals, like a vacation, happen within 3 years. Medium-term goals, like a new car, take 3 to 7 years. Long-term goals, like retirement, sit at the 7-year mark and beyond. Short-term needs cannot be managed with the same financial instruments used for long-term wealth building. Time serves as your ultimate filter. Defining a timeline automatically protects your immediate cash needs from long-term market fluctuations. While your personality matters, your primary anchor for risk tolerance is the amount of time you have before needing to spend the capital. Extending your investment timeframe allows the market to absorb its own fluctuations. What looks erratic initially settles into a predictable rhythm over years. This is where the sleep test comes in. If checking your portfolio causes panic, your current investments are misaligned with the time you actually have available. Mutual funds are the optimal vehicle for this strategy because they spread your investment across various assets, instantly reducing concentrated risk. Follow the fund matrix for your selections. For short-term goals, utilize debt funds. These provide the stability and high liquidity you need to access your cash immediately when the milestone arrives. For long-term goals, leverage equity funds. These harness market growth over time to ensure your savings outpace inflation. By categorizing your goals by time, the decision of which fund type to buy is mathematically solved. To connect your monthly income to these goals, we use a systematic investment plan, or SIP. This chart shows the mechanism of an SIP, called rupee cost averaging. You invest a fixed amount every month, regardless of whether the market is up or down. This system ensures you automatically purchase more units when prices are low and fewer units when prices are high. This removes the temptation to time the market, enforcing the emotional discipline needed to stay invested during fluctuations. Automation transforms investing from a high-stress decision into a frictionless background process. Schedule a biannual review to track measurable progress against each specific goal on your list. Watching a dedicated new home fund approach its target provides much higher motivation than staring at the balance of a generic retirement account. This strategy is adaptable. As life events like a new job or marriage occur, you can adjust your SIP amounts and fund allocations to match your new reality. A financial plan functions as a living system, constantly recalibrating to reflect the current stage of your life. Looking back at your notepad, those 3 initial bullet points have become a structured, professionally managed roadmap. True financial security comes from this kind of friction-free momentum. A well-designed system runs itself seamlessly once the parameters are set. The confidence of this automated approach is a direct alternative to the high-risk gamble of day trading or stock picking. Take one goal from your list today, even a simple emergency fund, and establish your first SIP. Start small, rely on automation for discipline,